By now, you must have been bombarded by messages, emails, and social media posts about the recent Bank of Canada rate cut announcement. It seems like every front, from your mortgage broker to your cousin's neighbor's dog, has an opinion on what this means for the housing market. But how does it really impact you, and what should you be cautious about? That's exactly what we're going to break down today. But before we dive into the nitty-gritty details, let's remember that while rate cuts are generally seen as good news for borrowers, they don't tell the whole story. It's crucial to look beyond the headlines and understand how these changes fit into your financial picture. So let's cut through the noise and get to the heart of what this rate cut means for first-time homebuyers, those facing mortgage renewals, and the overall real estate landscape. We'll also discuss some important cautions to keep in mind as you navigate these changing financial waters. Welcome to Real Estate Wisdom with Vish. I'm your host, Vishal Kapoor, and today we are diving into the recent interest rate cut by the Bank of Canada and what it means for home buyers and homeowners. So let's get started. So on September 4th, which was yesterday, I'm recording this on Thursday, very next day for this, the Bank of Canada delivered some welcome news to borrowers, cutting its policy interest rate by 25 basis points to 4.25%. And this marks the third consecutive rate cut, signaling a shift in monetary policy. So what's the impact is going to be on first-time homebuyers? For first-time homebuyers, this rate cut could be a game changer, and here's why. It will improve affordability. So lower interest rate means lower monthly payments, potentially bringing homeownership within reach for more Canadians. Number two, increased buying power. With lower rates, buyers may qualify for larger mortgages, expanding their options in the housing market. Number three, market activity. We might see more buyers entering the market, potentially leading to increased competition. So while it's a great news, but it's also going to increase the competition. And chances are you might get into bidding war. I hope not, but yes, possibility there. For people who are mortgage renewal coming, the rate cuts offer some relief. Lower renewal rates, if you are renewing soon, may be able to secure a lower rate than you currently have. It's also an opportunity to reassess. This is a good time to review your mortgage strategy and consider whether to switch lender or renegotiate terms. It's very important. Everything is negotiable. Now, the other question is, should I get the variable or fixed rate mortgage? With rates on the decline, the variable versus fixed rate debate becomes even more relevant now. So let's talk about variable rate mortgages. Historically, variable rates have been shown the cost less than fixed rate 70 to 90% of the time. According to a study by Professor Moshe Milewski of York University, with rates expected to continue falling, a variable rate could lead to significant savings. Now, what's the benefits of variable rates? Potential for lower overall interest cost, flexibility to lock into a fixed rate later, lower penalties for breaking the mortgage. So that's always been for variable mortgages that have a flexibility. Now look into the fixed rate mortgages. Fixed rate offer stability and predictability, which can be appealing in uncertain times. I hope like people learn from their mistakes. So benefits of fixed rates: consistent payments throughout the term, protection against potential rate increases, peace of mind for budget conscious homeowners. And that's what you have to look into your condition. Now look into what the short term and long term impact is going to be. In the short term, we are likely to see increased market activity, which is very given, potential uptick in home prices as demand increases, more first time home buyers entering the market, which we already have seen like people are there. Let's look into long term impact. Gradual increase in home prices if demand outpaces supply, potential for further rate cuts with some economists projecting the policy rate could reach 2.25% by 2025. Also, like a shift in the rental market as more people transition to homeownership. So also looking to that like a short term, like what's the fall market? We're already in the fall market right now. The fall market is expected to be more active than usual, especially after rent up. It's also going to be happening. So in the short term, so fall market outlook, the fall market expected to be more active than usual. Pent-up demand from buyers who were waiting for rate cuts. Sellers who held off listing during higher rate periods may enter the market as well. Increased competition, especially in desirable neighborhoods. But here are the cautions for listeners and watchers, I will say. Don't overextend yourself financially. Ensure you can afford payments even if rate increases again. You never know. Market is very unpredictable. Remember like what Governor of Bank of Canada was saying like a few years ago, that interest rate is never going to rise, but then it happens and people were under the water, right? So don't overextend yourself financially. Also, consider the full cost of homeownership, not just the mortgage payments. Be prepared for potential bidding wars in competitive markets. And that's very, especially in GTA area and Vancouver area, like it's very much tendency when this happen, bidding war going to start. We're also going to see a lot of listings coming out which is underpriced. And that will increase like to attract buyers, right? And when you go over there and you're seeing like a 2, 3, 4, 5, 10 offers coming in, what's going to happen? People going to get tempted, people going to pay more for it, right? So be cautious about that. Now look into that, like, with this rate cut, how much has affordability improved? So the 25 basis point, while helpful, may not dramatically improve affordability on its own. However, combined with the previous cuts and because we have like 2 rate cuts happen already, like a quarter percent. So we have 0.75 basis point we seen in last 3 rate cuts. So it could have a significant cumulative effect, right? So let's say, for example, you have a mortgage, 500,000 mortgage with a 25 years amortization. So last month, when it was a 5% interest, a monthly payment of could be 2,908. At 4.75% interest, monthly payment is 2,838. So this represents the monthly saving of $70 or $840 a year. While it's not enormous, it's a step in the right direction for affordability. So if you look into last 3 rate cuts, if you add up like $70, $140, and then now 70 again, like a $210, in the long run, you're saving money, right? So it's gone like down a little bit. Not significant, but yes. And certainly I'll incorporate that important point about the stress test. You know, rate cuts are great, but there's also the stress test is there. And people who don't know what the stress test is, here's a crucial point, which many people overlook when they get excited about the rate cuts. Don't forget that your affordability is also determined by the stress test, which means the bank still qualifies you at an interest rate of 2% above your actual rate, or the Banks of Canada's 5 years benchmark rate, whichever is higher. And this stress test is designed to ensure that borrowers can still afford their mortgage payments if interest rate rise in future. So while the rate cut does improve affordability to some extent, the impact on how much you can borrow might not be as significant as you initially think. So, for example, if you secure a mortgage at 4.75%, the bank will assess your ability to make payments as if the rate were 6.75%. And this is to ensure you have a financial buffer in case rates increase in the future. Bank doesn't want to lose, this is for the bank's protection, which we put in there, but also your protection as well, that people go too thin sometime, right? They don't realize that, if they never expect it's going to go higher. So what does this mean for you? Your maximum borrowing amount may not increase as much you expect with the rate cut. It's crucial to consider your long-term financial stability, not just current affordability. And working with the mortgage professional can help you understand how the stress test impacts your specific situation. So do connect with your mortgage broker. And if you don't, you can reach out to me. I can connect you. I know a few good ones. Not few, actually, quite a bit. So remember, while lower rates are generally good news, they are just one piece of the affordability puzzle. It's essential to look at the bigger picture and ensure you're making substantial financial decision. So in conclusion, I will say the recent rate cut by the Bank of Canada is a positive development for both home buyers and current homeowners. However, it's crucial to approach any real estate decision with careful consideration of your personal financial situation and long-term goals. As always, consult with the financial advisors, mortgage professionals, and make the best decision for your unique circumstances. So that's all for today. Episode of Real Estate Wisdom with Vish. Remember, in real estate or life, knowledge is power. Stay informed, stay savvy, and until next time, this is Vish signing off. Bye for now. Disclaimer: the information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.